cost of borrowing. This may, however, lead to a rise in consumer prices, generating exchange rate pressures on the currency. In the process, the committee also believes that loosening could worsen the current account balance through increased importation. On the argument to hold, the committee believes that key variables have continued to evolve in line with the current stance of macroeconomic policy and should be allowed more time to fully manifest. In consideration of the foregoing, committee decided unanimously by a vote of all members present to retain monetary policy rate MPR at 14% alongside all other policy parameters. Consequently, MPC voted unanimously to retain 1. MPR at 14%, 2. CRR at 22.5%, 3. Liquidity ratio at 30%, and 4. Asymmetric corridor at plus 200 basis points and minus 500 basis points around the MPR. I thank you for listening.
Thank you, Governor. Distinguished ladies and gentlemen, we have listened to the 117th communique of the MPC of CBN. It is time, if there are any questions. It's so clear. If there are questions, you may just walk up here. Tell us your name and the organization you work for. But please remember that we have the house rules here. You do not depart from the subject matter raised in this communique.
Yeah, thank you very much, Director. Let me, first of all, on behalf of the management of the Central Bank of Nigeria, thank the President Muhammadu Buhari for nominating our new members to the Monetary Policy Committee, and also seize this opportunity to also thank the leadership of the Senate of the National Assembly for confirming these nominees. I see this opportunity to please introduce them. Mr. Edward Lematek Adamu is appointed Deputy Governor. Mrs. Aisha Ahmad, Deputy Governor. MPC members are Dr. Robert Asogwa on my left, Professor Adeola Adenikinju on my right, and Dr. Aliyu Rafindadi Sanusi also on my right. I think it's important that I let all of us know that these members have gone through intensive induction in the last couple of days, and they have been fully apprised of their responsibilities as members of the Monetary Policy Authority, and they are aware of the onerous responsibility this imposes on them, and I can assure all of you that they are well qualified and skilled to carry on this responsibility. I'd heard in the course of the interviews, pre-communique interviews, somebody making a comment that maybe because they are new, that maybe the decision will be to hold. It has nothing to do with the fact that they are new. They went through strong induction, and like I've always said, the members of the Monetary Policy Committee are independent-minded people who come in with no preconceived mission or decision. They come in, data is presented by the Monetary Policy Committee, Monetary Policy Department, and based on that, they make up their mind as to the choice of options that they're going to go for. So today we've decided, based on data available, not because they are new, but because we have a strong set of people who understand their responsibilities and have decided to hold positions for now. Thank you. Question time.
Okay. Thank you, Governor.
Thank you, sir. My name is Udo from Premium Times. So if I heard you well, you said that the foreign reserve has risen up to 46.99.
69.
6.9 as at 29th of March. Now, I am bothered about a few things there. Number one, it has to do with the fact that I want to know exactly what is the composition of this National Reserve. Because I've had interactions with some analysts who said that the bulk of this reserve that we call, Nigeria cannot touch it because it's amounted to a lot of proceeds from the Eurobond debt, which the federal government has already taken the Naira equivalent and to use in paying debt. So in that case, is it possible that today, if we have the need for a refinery, we can reach into this, our reserve, to take some money there and build a refinery, if indeed. So if you cannot touch, why can't we touch it?
Thank you. Nancy.
Thank you, Mr. Governor. Good afternoon, everyone. I'm Nancy Naji, the head business desk, DAR Communications PLC. I want to ask, Governor, you did say in your statement that you would be coming up with mechanisms to allow banks have efficient credit delivery system to people that need credit. I want to know what those mechanisms are, because a lot of Nigerians are reeling from high interest rates. You know what I'm talking about, 28-30% in the banks. And I just got to understand even this morning that the CBN is giving banks more, stringent conditions to give to those they are giving, banks are giving monies to for collaterals. So how can we have effective credit delivery system moving forward since all rates are being held, status quo still maintained? Thank you.
Thank you. So that's the end of the questions. Mr. Governor.
Allow more questions now.
Sir, but they are not ready. It's so clear. The communique is so clear. Okay.
Mr. Governor, sir, my name is Issa Abdoha from New Telegraph newspapers. There are concerns for the rise of NPL in the banking sector, and you did say that you urge federal government to pay contractors' debt so that these loans can be paid. What other measures will you propose?
Thank you. I think the governor can answer the questions. Thank you very much.
Okay, well, thank you very much. And I'm happy that the communique explains the circumstances that we find ourselves now, therefore making it so clear. And we have just only about 2 or 3 questions. That the foreign reserves is at 46.69 billion, and that you are concerned about the composition of foreign reserves, the bulk being Eurobond. Yeah. Let me tell you. Let me say this: that the total amount that has been raised through Eurobond since last year is less than $6.5 billion. Even if we deduct $6.5 billion from 46.69, it's still about 40 billion, which we have. And that is an ample size. But again, it's important for you to know that once the Eurobond proceeds got into the central bank reserves, and it's converted from dollar to naira, it ceases to be money belonging to the fiscal. It becomes part of CBN reserves, which can be used as and when we deem it necessary to do so. It's not the information that you have that the bulk of the reserves cannot be used is untenable. However, when you ask whether it can be used to build refineries, I dare say that that's not the way it works. The federal government is encouraging private sector investors to come into refineries. And what we do expect, though, is that when those private sector investors are coming into the refinery business, if they are foreign, then they will come with their dollars, so they won't need our dollars. But if they are local and they will need to import the refinery equipment, of course, we have lots and ample of dollars to allocate to them for them to bring in the equipment. And I can assure anyone who is interested in going into refinery business, if you have your license from the federal government, we will accord priority to you to import those refineries because we badly need them here. We know, and you all know, that importation of petroleum products into the country constitutes a large portion of our import, at some point rising to as high as 25% of our import volume. And we think that if we accelerate the process of encouraging investors to go into refinery business, it will certainly help our reserve position, conserve our foreign exchange for importation of goods that we cannot produce in Nigeria.